Hello everybody. So this video is entitled MSTR quote-unquote sells, because there's headlines all over the internet saying that Saylor is selling Bitcoin, making it seem like the company is in trouble. Yet, in fact, you see this morning actually STRC repegged. We traded at 100 this morning. We were able to ATM on the credit instruments. And I want to go over some of the final statements on the call in the Q&A, which I haven't covered, especially Saylor mentioning twice his willingness to quote-unquote rip the shorts, which is a different stance from the stance that he had 2 years ago, where he said the shorts were welcome. So I want to talk about these few things. Stock has not moved much, though. This stock, of course, moves correlated to Bitcoin. The correlation changes a little bit, but it doesn't really move on headlines, and that's a good thing. But boy, did the headlines try to go after MSTR. I mean, just to show you a few, MSTR posts loss, right? Posts a loss of $38, not mentioning it's an unrealized loss. Announces the end of the HODL strategy. And Yahoo Finance just outright saying he's selling. He built a Bitcoin empire and he's selling. And they even went out of their way to make a frankly not very compelling drawing of Saylor crying with a Bitcoin emoji panicking. Anyways, the journalists are having a field day. They love this. When in fact, of course, when you get into the nuance of what Saylor said, it is so much different. Why did Saylor say that he would be okay selling Bitcoin? And, note that there was no enthusiasm about selling the Bitcoin. He said he would be okay doing it on the call because there's a $2 billion tax benefit to pick up. Yes, it's true. There's a few Bitcoin sitting on that balance sheet that were bought above 100,000, above 110, and even above 120,000. So of course, if you were to sell that Bitcoin, you could pick up a enormous tax benefit. And so that's why Saylor says reluctantly, I guess it would make a little more sense for us to pick up that tax benefit. And so maybe the next stretch dividend will be paid for by a sale of Bitcoin at a loss to capture that tax benefit. It makes a lot of sense. And of course, Saylor was more excited when discussing the sale of Bitcoin. He was more excited when discussing it from the angle of changing the narrative on STRC. You had a lot of journalists going after Saylor, saying, "Oh, this is a Ponzi." A lot of mainstream YouTubers. And I think the big change in the narrative is this: capital gains fund the dividends. Capital gains fund the dividend. And Saylor, of course, tweeting yesterday, as long as you buy more Bitcoin than you sell, you're okay. So here's my guess of what's going on. Here's my guess of the stance. I think it would be logical for him to sell some Bitcoin right now to pick up the tax loss, and then perhaps once you've picked up that tax loss, perhaps you go ahead and sell some of that, $17,000 Bitcoin on the balance sheet. Why not sell some of that $10,000 Bitcoin on the balance sheet? We know he has some of that. Sell some of that Bitcoin and show a huge profit. And when you show that huge profit, and you're actually quote unquote paying the tax, but you're actually just picking back up the tax loss that you just created. And then all of a sudden you can show that it's actually the capital gains that pay the dividend. Actually, you could do this also in reverse. Just do it in a way that you show capital gains first, and then, of course, before the end of the year, pick up a capital loss to offset that tax liability. I think it's a win-win. I think he found a way to be a win-win, and it's very clear that Saylor now has become tactical. Saylor's, North Star is the Bitcoin per share, increasing the Bitcoin per share, and he's become more tactical in how he's going to manage the Bitcoin stack. And of course, we presumed this would happen at some point. One of the things that he did not discuss on the call, but was explicitly listed in the presentation, is openness to BTC derivatives, is openness to selling call options on Bitcoin or selling even put options. Why not on future Bitcoin buys? I think that's a very big deal that he's open to doing the derivatives as well. So clearly, Saylor evolving in the way he manages the Bitcoin, Saylor being less and less of a maxi, Saylor having spoken somewhat positively about these staking networks such as Solana, and Saylor is changing, and of course that makes a lot of sense to me. Also, and this will deserve a separate video, but it is very clear to me that Saylor is doing all he can to please the credit rating agencies. The way he was talking, you can tell that he was trying to please the credit rating agencies. Because if your goal is to get a tsunami of digital credit to happen, if your goal is to sell $300 billion worth of STRC over the long run, which seems to me like it's the goal, if that's the goal, then you have to befriend the credit agencies. Then the credit agencies need to like you. And so Saylor is doing what he needs to do for the credit agencies to like you, to get STRC credit rated at some point. And of course, if STRC credit rated, that means MSTR at one point may get past the S&P 500 committee and actually join the S&P 500 to actually reach that MNAV that Saylor has not given up on, right? I personally don't mind selling at a 1.3. I don't mind the dilution at a 1.3 MNAV. Saylor clearly seemed to mind that on the call. Saylor clearly talking about his main interest is just STRC. At one point, Saylor even hinting in the call that they could buy MSTR stock back and that STRC could perhaps be the bigger instrument, the bigger ticker symbol of strategy could actually be STRC and not MSTR. Think about that at one point. And that's, of course, in terms of market cap, in terms of a buyback. Stretch is back at 100. So that was kind of a celebration of the video. We had a good 15 minutes. Of course, then you have the jobs report that came in hot. And of course, if the jobs report is hot, that means the odds of interest rate cuts, kind of go down. And that's bad for all credit instruments. So, good news on the jobs report. Bad for credit instrument. That's what I think happened. But I'm going to go ahead and say we did not really depeg. Because we've been at 99 cents most of the day. Stretch.live telling us here that he may have raised 1.1 Bitcoin. I think it's more than that. Because when I see on Robinhood, it was in pre-market, but a good 15 minutes we were at 100. So I think it did a little more than that. But a micro buy is probably what we're getting this week. We're officially back at 100, and that's worth a celebration. And lastly, let me just end, and I kind of talked about this already, but end of call takeaways. So this is my third video about the call, the takeaways. Saylor clearly is not welcoming the shorts anymore. Nothing more than rip the shorts would please him. He said that on 2 separate occasions. Saylor is not willing to sell anything but Stretch at this level. He's been very outspoken on the call, saying that all of the preferreds and the common are heavily undervalued. Saylor thinks only Stretch is properly valued. Why only Stretch is properly valued? Because when the market optimism picks back up, when the market gets back to its senses when it comes to Bitcoin, when that happens, the yield of Stretch will be adjusted down later, or the ATM will be run up later, and therefore that will economically make up for the mispricing, i.e. Stretch will always be priced right. Right now, the other prefers, because it's a fixed yield, and of course the common, he doesn't think they are well priced. If you sell any of the prefers, or if you sell the common right now, you can't change the valuation that you get. You can't change the fact that you sold it for cheap. If you sell Stretch right now, later on you can adjust the yield, and that changes the fact that you may have sold it for cheap. Lastly, talking about Saylor still, believing that we should trade at a price to earnings multiple of the Bitcoin yield. Now, of course, given the size of strategy in my portfolio, I fully agree with Saylor. But I think Saylor is extremely optimistic. I fully agree with that. Yeah, that would be absolutely wonderful. Why wouldn't we take the Bitcoin yield and just slap a market S&P 500 basic market P ratio on the BTC yield? Think about that. We have, let's say this year we do about $15 billion of BTC gain, which I think is reasonable. So $15 billion of BTC gain, and then you take the average PE of the S&P 500. What is it, 20? I'm going to say 20. Boom, that would make the company be worth $300 billion. It would, the MNAV would essentially be like a 5 or something like that, maybe even a 6 or something like that, if that were to be the case. We're nowhere near that. We're sitting at a $62 billion market cap. So Saylor talking to us about his dreams of a 5x multiple expansion, not even accounting for, of course, the price of Bitcoin itself. And if the price of Bitcoin itself even goes up more than that, there could be crazy upside from multiple expansion on MSTR. I think Saylor is extremely optimistic here. Extremely optimistic. Maybe one day this will be the case, but we are nowhere near that. And frankly, I'm just very happy with the way the stock is performing right now. To me, if we keep performing right now like this for multiple years, I will be very happy with this investment, because we are taking over the digital credit world by storm, and eventually there's no helping. It will accrete. There's nothing we can do. It will accrete to the common stockholder, and I am a very happy common stockholder. So anyways, this was not investment advice, not financial advice. This is only entertainment on this channel. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.